Dear students, welcome to the home mentoring session of accountancy. Myself, C.S.K. Khanna from the SD Vidya School, Ambala, Kent. Dear students, from the part B syllabus of our subject, we had completed two very important lessons. First was relating to accounting ratios and second was relating to cash flow statement. Today we will discuss about a very important other lesson, that is comparative statements and common size statements. When we had started this part of our syllabus, I share with you that this part is associated with the analysis of financial statements. And when we have to make the analysis, automatically we need certain tools with the help of which we can have the analysis of financial statements. And while discussing to the various tools for the analysis of financial statements, I had shared with you that they include comparative statements, common size statements, trend analysis, ratio analysis, input output analysis, cash flow statement, funds flow statement, break even point, and various other tools are used for the analysis of financial statement information. So today, out of these important various tools, we will share and learn how to prepare the common comparative statements and common size statements. Now, before learning how these statements is to be prepared, it is important that we know what we mean by these statements. So in the first part, we will discuss about the comparative financial statements, and in the second part, we will discuss about the common size financial statements. In the first part about the comparative statements, I want to share with you, as per the previous syllabus indications as well as the previous question paper trend, CBSE generally asks 4 or 3 marks question from these two lessons, and that is of numerical relating to comparative statements or of common size statement. Only one is asked, either comparative statement or common size statements, and generally the question is of 3 or 4 marks depending upon the information which we have to share or prepare. Now, first of all, we understand what we mean by the term comparative statements. Dear students, it is very important to estimate the day-to-day and the future growth of the firm so that we can have the financial planning. Now, in order to have the effective and successful financial planning, we have the analysis of the previous information, and on that basis, we could have the future planning. Now, in order to have the past performance analysis, we will make and have the comparative statement, comparative study of the various years financial statements so that some authentic conclusion can be drawn. When financial statements data of 2 or more than 2 years is placed side by side to have the comparison, or when we compare the financial information of the financial statements of 2 or more than 2 years, keeping them side by side in the form of comparison, it is known as the comparative financial statements. I repeat the meaning of the term comparative financial statements. Comparative financial statement here means when we compare the financial information or financial data of the financial statements of 2 or more than 2 years, keeping them parallel or simultaneously in the comparison form, that is known as the comparative financial statements. Now, which financial statements we will have to make the comparison? Under the financial statements, we prepare the number of statements, but two very important statements which you had learned in class 11 to prepare. One was the trading profit and loss account, and second was the balance sheet. The preparation of trading profit and loss account is also known as the revenue statement, or it is the dynamic statement, while the second statement, that is the preparation of balance sheet, that is known as the static statement. So here, in the terms of financial statement, we will learn how to prepare the comparative balance sheet and how to prepare the comparative financial statement, in the sense trading profit and loss account, and certain effective conclusions can be drawn on the basis of this comparison. Now question arises, what is the use, significance, importance of comparative statements? It makes the data very simple and in very easy understandable form. Then on the basis of this, it indicates the trends, that the last year was performance this year this, and we are going to this trend, and probably on the basis of the past performance we can forecast for the future performance also. It also highlights the weak and strong points of the organization. We can compare the firm's performance with the average performance of the industry. Firm is an individual unit, industry is a group of unit. So we can compare the performance on that basis. It also helps us in the forecasting, as I told you, that on the basis of preparation of the comparative statements, we can project and we can forecast about the future. So very important question arises, how to make comparative financial statements. First of all, I will share with you how to prepare the comparative balance sheet or comparative position statement, as it is a static statement. Now, preparation of comparative balance sheet or preparation of comparative profit and loss account is very easy. But what you have to do, just understand the one question. Later on, you are in position to automatically solve all other problems. See here, you've been given a comparative, you have to prepare a comparative balance sheet from the following figures. You have been given the information of balance sheet of the two different years. For 1 year, that is previous year 2010-11, and for the current year 2011-12. Dear students, I once again request you, kindly must check that the years must be given in the base year and in the current year form. That base year will be given first, followed by the current year. If the years are given different, you have to take, otherwise you have to make the reverse, that first you have to take the base year and then you have to take the current year. Here the years are given in order, that base year is the previous year and the current year is the next year is given. Suppose if the in the first column year is given 2011-12 followed by year 2010-11. Now while preparing to the comparative balance sheet, you have to change the figures in the different way, that base year figure should come first followed by the current year figures. Now how this comparative balance sheet is to be prepared? Very simple thing is there, that in addition to these two columns for the amount, you have to draw two more columns, that is successive two more columns. Now those successive two more columns will be, first column will show the absolute changes or absolute increase or decrease in terms of amount. How it will be, I will share with you. And in the last column, that is the second column or the fourth column, we will calculate the difference or absolute change in terms of the percentage. I hope you will be understanding that in the first column we will have the absolute increase or decrease, that means in terms of the amount rupees, and in the last column we will calculate the percentage changes on the basis of the base year figure and the amount of change. Now see here, the balance sheet shows the figures of liabilities and assets. First you have been given under the shareholder funds, share capital is 15 lakh, 20 lakh, then reserve and surplus 4 lakh and 3 lakh. How it will be prepared, just understand in the solution of this. Now see here, that solution is given this way, that you have been given the four column, as I was sharing with you, that the third column, these two columns are already given to you. You will just copy them from the question. In the third column, you have been given the absolute change, and in the last column, you have to calculate or find out the percentage of change calculated on the basis of the base year amount. Now see here, the share capital in the year 2011 was of rupees 15 lakh. In the year 2012, it is of 20 lakh. Now, absolute change here means change in terms of rupees, it is of rupees 5 lakh. Then in terms of the percentage, it is 33.33%. How it came 33.33%? That what we have to do, the amount of change divided by the base year figure into 100. Here, for example, for this first figure of share capital, absolute change is 5 lakh. It is divided by 15 lakh into 100 for percentage. You would find it out 33.33%. To the second item, reserve and surplus 4 lakh is given, and in the current year it is 3 lakh. So automatically it is reduced. 1 lakh is the change in terms of minus. You will check it. Here it is given in the bracket. The figures which are in the minus you may write in the bracket, or you may give the sign of minus. Here it is 1 lakh. Now percentage change is how it is calculated. 1 lakh divided by the base year figure, that is rupees 4 lakh. You would find it 25%. 1 lakh divided by 4 lakh into 100, percentage is comes to 25%. To the next item, non-current liability, long-term borrowings. Base year 6 lakh, current year 9 lakh. Absolute change 3 lakh. In terms of percentage, it is 50%. 3 lakh divided by 6 lakh. In case of the current liabilities, trade payables, base year figure 2 lakh, current year figure 3 lakh, absolute change 1 lakh, and then 1 lakh divided by 2 lakh base year figure into 100 in terms of percentages comes to 50%. Likewise, you have to calculate for the asset side item also. The figures are given in the same way as we had calculated for the liability side item. So this way we will prepare the comparative position or the comparative balance sheet. Last two columns, absolute change in terms of rupees, percentage change, which is calculated with reference to amount of absolute change divided by the base year figure. So this will give you by multiplying 100 the percentage amount, and that you have to show in the last column. Thus only one important remembrance, only one important point to keep in mind, that the years which have been given, they must be given in terms of the base year, current year, and then a comparison should be done in absolute change, and in the final column you have to show the percentage change. Same way you have to show for all the items of the liabilities as well as for all the items of the assets. In our next video, we will learn how to prepare the comparative profit and loss account, or the financial statements, very important part, that is known as the profit and loss account.